Okay, brothers and sisters, please take seats. Bismillah ar-Rahman ar-Rahim. Alhamdulillah, wa salatu wa salam ala Rasulillah wa ala alihi wa sahbihi wa wala. Please. Yes.
Hello, how are you? Good to see you.
All right, I'll sit there.
Okay.
No, definitely I could have to cancel it.
We are honored today to have Dr. Ishrat Husain, who has a very rich experience on both sides of the economy. He has been a chief economist in the World Bank for 9 years for different areas, for Africa as well as for East Asia, in addition to other functions in the World Bank. And then he has another 9 years as the governor of the Central Bank of Pakistan. And more recently, he has been advisor to the Prime Minister. He has been involved with the Islamic Development Bank on a variety of occasions for quite some time. So he knows the history of this organization. He knows many of our colleagues, our leaders, our senior management. He is actually one of the intellectual giants in this area, and we are very proud to have him with us today. We asked Dr. Ishrat to talk about the new role of central banks in turbulent times. As we have all seen and we all witnessed how the world has moved from one crisis to the other, and central banks have been at the center of all these crises. And definitely many things have, came up, whether the banks, the central banks keep the same old techniques or develop new techniques, and how to do or how to manage these crises. Without further ado, Dr. Ishrat Husain, we are very welcome, and the floor is yours.
Thank you very much, Mr. Director General. It's a great pleasure to be back to this great institution. I have a long association, thanks to Dr. Ahmed Muhammad Ali, one of the giants who really created and took this institution to where it was. And I want to pay special tribute to him. My topic today is itself very uncertain, because we don't have a 2020 vision in order to foresee as to what is going to happen in the future. So with that limitation in mind, I would start with what our cumulative knowledge is and where we look at things as of August 17, 2023. And I start with the sources of uncertainty. I have my own list, but each one of you may either add or subtract to this list. This is not a definitive list. This is a more of a tentative list, which I want to, with humbly present and share with you. And we can have discussion on that sources of uncertainty. Then I assert that one of the difficulties with this particular period of uncertainty is that we are unable to assign probability distributions with each one of these sources of uncertainty. So there is no additive or linear function as far as the sources of uncertainty are concerned, but there is very much of interactive actions and interactive impacts which endogenize some of the decision-making quite difficult and complex. So previous, you had a single source of uncertainty, global financial crisis, COVID-19, and you could handle this. But this is an amalgam. This is a combination of many sources, and therefore specifying what kind of the function we have is quite difficult in assigning the probability distribution. My third submission is that this scope and the mandate of the central banks also vary across the world. There are some independent central banks, mostly in the advanced countries. There are some semi-autonomous central banks in emerging markets. And there are some very much controlled central banks, which belong to the bureaucracy of the government. So the response capacity of each one of them will vary according to the scope and the mandate of the central bank. So that further complicates as to what the role of the central bank should be. My major, because of my background, my major thrust would be on the emerging markets and the poor countries. I'm not so qualified to probe into the advanced countries and how they are going to tackle. Let me start with the sources of uncertainty to set the ball rolling. In my view, there are 8 major sources of uncertainty in the future. Number one is the macroeconomic instability at the global level, where you have a struggle between controlling inflation and at the same time trying to keep the wheels of the economy rolling and unemployment under control. That is what is happening today. And the IMF has come up with a slow growth scenario in order to combat inflation. And this macroeconomic instability will have serious repercussions for the developing world, because almost 50% of the global output today originates from the emerging markets and the developing countries. And we are living in a very highly interdependent global economy. My second source is that of the geopolitical risks. So far, we had, after the collapse of the Soviet Union, a single sole power center, which was the United States. But lo and behold, now we have another center which has emerged as a competitor to the United States. So we are now talking not only of the unipolar world or a bipolar world, but we are now talking about the multipolar world. And the Ukraine-Russian war, which came to most of us as a surprise, is a very clear manifestation of what the multipolar world would look like. And what is unfortunate, that the countries which were pleading us in the 1990s and 2000 up to 2010 till Trump to open up our economy, to liberalize our international trade, to opt for financial integration, are now moving inward and protecting their own economies. They are not allowing the Chinese to sell their technologies and the products, their export controls, and they have subsidies. They used to condemn the industrial policy, and now they have got subsidies, huge subsidies, for domestic manufacturing of chips and semiconductors and so many others. So they are now retracing their path because of this geopolitical risk, which will have repercussions also for us. My third and more depressing source is the rising income inequalities. And that has the implications for social cohesion and the trust. Social capital and trust are very important ingredients of any economy. And once you lose that trust, and when you have too much polarization, where 50% of the bottom poor, 50% of the bottom poor population have the same wealth as the top 1% of the population, then that is a recipe for social unrest some way or the other. And that trust and the social capital, which glues the economy, is completely disappearing. And to me, this is a very serious. Even China and India, which have done extremely well as far as economic growth is concerned, have more billionaires in dollar terms today than they had 10 years ago. And the number is growing every year. And while the Uttar Pradesh, which is the largest state in the which is called UP in India, has only $910 per capita income compared to 4,000 and 5,000 in the southern states and Maharashtra and Gujarat. And Bihar is even much worse than Uttar Pradesh. 210 million people live in Uttar Pradesh itself. Look at India's growth, which has been phenomenal since 1991, but distribution of that growth has been very skewed, both regionally as well as internally. And China is the same thing. Look at the coastal provinces. They are in a completely different league as compared to the Western hinterland. So to me as an economist who believes in the broad-based economic and social development, this is very disconcerting. My fourth source of uncertainty is on the demographic shift. The developing countries, particularly in Asia and also in sub-Saharan Africa, have larger population below the age of 30. On the other hand, you have countries like Japan and Korea, where the dependency ratio is increasing. Japan has now negative 0.7% growth rate in the population. Korea is going to go in the same direction. China has lost its position as the #1 most populous country to India. And I think China is also going to have this high aging population. So you have an aging population, but you have higher youthful population in the developing countries. And the anti-immigration policies, particularly in the European countries, is giving rise to the rightist political parties who are anti-immigration. Now, it is in the interest, and Japan has really woken up, and Japan has now, being racially, culturally, ethnically a pure country, has decided to open up its borders to the developing country professionals and skilled labor. They're still not allowing the unskilled labor to come in like the Gulf states do. And that, I think, is a source for developing countries to invest in their youthful population, prepare them for skill sets which are in demand in countries like Korea and Japan, and then it will be China, and then it will be Europe. So that is something which we have to do ourselves as a policy and institutional imperative. My fifth source of uncertainty is the huge information explosion which is going on, which is completely unfettered. You have the social media which is now shaping the opinions and also influencing the policymakers. And you have a danger that the policymakers may accept that opinion as a true reflection of the reality and take distorted or incorrect decisions, which will harm the society and the countries. So sifting out of the information from true facts to the fake and misinformation is a huge task for the policymakers. And I don't think, having spent the last 3 years as a member of the cabinet, I don't think we are equipped to do that. We just are so responsive to the media, the social media, that we don't try to make sense out of that information, because that is a very powerful tool which is coming up. And this is dangerous as far as the future decision-making is concerned. My sixth source is the acceleration of major advances in science and technology, information technology, ChatGPT, genetic engineering, the challenges of cybersecurity, which is more powerful than conventional warfare to disrupt the economies, machine learning and artificial intelligence, quantum computing. They can all be very beneficial for the society, and at the same time, they can be harmful. Where the equilibrium sets, we don't know. I'm delighted that a lot of Pakistani female doctors, and we used to produce 80% of females as doctors as compared to 20%, but they didn't participate in the labor force. They withdrew from the labor force for, maternal reasons. They have now come into the telemedicine because of the artificial intelligence and the kind of technology which is available. So even the rural areas now have access to very advanced advice and diagnostics as far as the medicine is concerned. But the ChatGPT, on the other hand, has encouraged plagiarism for the term papers, for the research papers, and the teachers are in a very, very difficult situation as to how they differentiate between the original contribution and the plagiarized contribution through the ChatGPT. So you have both the positive impact as well as the negative impacts of technology. And in genetic engineering, you can replace now splicing the genes and create, a perfect human being. Are we moving into Hitler's Nazi regime, where everybody will be of a particular disposition and lose the diversity and the richness of the human beings? That's a question we have to address. My seventh source is that now there are very few skeptics about the risks of the climate change. The evidence is overwhelming that we are going to have serious difficulties, particularly in food, energy, and water nexus as far as climate is concerned. And we have seen this. Pakistan had a floods, which created losses of $32 billion, displaced millions of people, destroyed our crops. We never had such kind of torrential rains. We didn't have this kind of glacier melting altogether. So we are witnessing, it's not something indistant. But at the same time, we have 800 million people below the poverty line. So the World Bank and Asian Bank and Islamic Development Bank are all being told to shift their lending instruments, their volume of assistance towards the climate, which is fine. I have no problem with that. But is it at the expense of development financing, which we still need for poverty alleviation, for investment in human capital, for building infrastructure in the poor countries? If it is going to be, because the resources are limited, are we going to shift our resources from development to climate change? I'm very worried about it, because that means that more people would be at hunger, illiteracy, poverty, and we are going backwards rather than going forwards. And my final point, which I emphasized earlier also, is that this whole 25-year period from 1990 to 2000, I would say 20 years, 2010, was a glorious period for developing countries, where they increased their share in global GDP, they reduced the poverty from 2 billion to 800 million. They also were able to increase their share in the world international trade, because international trade was growing twice as much as the global GDP. So you had countries which had liberalized their trade, and China is a very good example of that, who captured the market shares, and China now today is the largest exporting nation in the world. So this process of globalization, in my view, as an economist, has really been very, very positive influence on raising the standards of living. Well, what is happening since 2010 after the global financial crisis and the COVID-19 is that the forces of deglobalization are becoming more active. That has a serious, in my view, negative impact on the future growth and development of the poor countries, particularly in sub-Saharan Africa, who are still suffering from major disabilities of economic growth, and they need our support in trade and financial integration. And look at how the migrants are being treated. We have ships capsizing. We have refugees who are, being completely ignored by the developed countries. And this is something which is a reflection of the poor state of economy. So is deglobalization going to accentuate at the same time when the developed countries are very much hesitant to accept the immigrants? And as I said, Italy now has a rightist party in power, and Spain just had an election where I think they will have to use the coalition government in combination with the rightist parties. So these are the 8 sources of uncertainty. How much time I have? 12. There's no question and answer? After 12. Okay, all right. So having identified the sources of uncertainty where the central banks have to adapt themselves, this is just not the role of the central banks. What I have sketched out is a joint effort of the governments, the private sector, the civil society, the academia, the financial markets, everybody. When they put our heads together, then we will be able to get into a viable approach. I'm not saying solutions, because we don't know what the solutions are going to be. Viable approach to tackle these uncertainties. My question is whether the global governance structure is really geared to meet these challenges? We have a United Nations, but we have a decision-making which is concentrated in the hands of the 5 countries. They can veto, things which they don't like. The representation of the developing countries or the emerging countries is completely lopsided. You have international financial institutions, which are also heavily dominated by the countries which have the money to subscribe to the capital of these countries. We have a World Trade Organization where the dispute resolution machinery has been out of gear for such a long time that the disputes are not being settled. So while the challenges are formidable, the governance structure at the global level is completely inadequate to meet these challenges. So to expect that the central banks alone will be able to play a role which will impact or mitigate or address these uncertainties is unrealistic in my view. Therefore, we have to be very, very modest and very humble that we don't put too much burden on just one set of institutions. Although the history of the central banks, in my view, has been very impressive. As you start looking at the oil pricing crisis of the 1970s, and because of that, there was a huge spate of inflation all over the world, particularly in the United States. The central bank came to establish itself as a competent, non-political, non-partisan institution which had one single objective in mind, which was to suppress the inflationary tendencies and to anchor the inflationary expectations. That is Paul Volcker's leading role as the Fed Reserve governor, which was followed by others. Then you came the European Central Bank, which combined all the European central banks and has been a very effective and very powerful institution. So the central banks had been recognized as a force as far as fighting inflation was concerned. But to me, coming from a developing country, inflation is not the only concern we have. We have to accelerate the rate of economic growth, whereby our youth can find employment. And also, we have to fight inflation. So 3 objectives: how to sustain or accelerate economic growth, to create jobs and reduce unemployment, and at the same time inflation. That has become a very complex and a very difficult proposition for the central banks, especially in developing countries. Even if you look at the Fed has both the inflation fighting as well as economic recovery as their mandate. So it's not just one or the other. Here lies the difficulty, and I would like to point out some of the trade-offs which the central banks in future given these uncertainties, have to face. First of all, whether the Phillips curve, the relationship between unemployment and inflation, remains valid in developing countries or not, both historically, but more important, under the future trajectory. Because as I pointed out, the historical data which we use in our econometric analysis is not indicative of what is going to happen in the future, because you have paradigm shift. And capturing that into the equation where we decide where the balance lies between inflation and unemployment is something which is a big trade-off, which we do not know how to tackle at this moment. The second part of the trade-off is, as I said, as a development economist, I want public sector capital expenditures on human capital formation, on infrastructure. But at the same time, we have to keep the fiscal deficit under control so that it's not monetized and therefore transforms itself into high-powered reserve money, which then fuels inflation. So do we cut down on capital expenditure in the poor countries where the literacy rate is still so low and where the productivity lags behind because of the poor human capital? Or should we accommodate some of the inflationary tendencies? What is the midpoint between that? We don't know that, but this is a trade-off. My third trade-off is that we, accept it or not, most of the developing countries, including my own and my book called Pakistan, the Economy of an Elitist State, shows that the elite classes in most of developing countries have captured the decision-making. That means that if you do targeted subsidies only aimed at the poor, you're able to contain your fiscal deficit. But the elites want subsidies for everything. They want for petroleum products, they want for electricity, they want for gas, they want for industrial production. Now, the resources are limited. If you do these across the board subsidies, you can't do it for the poor because the poor will suffer. But the decision-making, unfortunately, is in the hands of the elite class. I lived in Nigeria, and my friend knows Nigeria. Nigeria, Al-Hajis and the chiefs dominate the whole picture. They take all the decisions. And the poor, I was in Abuja just last year because my daughter works there in Abuja. I was appalled that the poor are living almost 20 to 30 kilometers out of the main city, and they have to transfer 3 or 4 times to take the public transport because public transport system is not really working to reach their homes where they're working or the offices where they're working. Now, if you have a subsidized public transport system, like we decided to do this in Pakistan, it takes only half an hour where it used to take 3 to 4 hours. But the elites just want more subsidies on the petroleum products so that they can have the big cars. The number of SUVs I saw in Abuja is much higher than when I used to live there. So that is something which I am really concerned about. Fiscal deficit, should it be only for the poor or should it be across the board? And that, I think, is a challenge for the developing countries. The second or the fourth trade-off is financial stability versus the price stability. Now you have financial institutions. If you put too much burden on the financial institutions, then all your financial soundness indicators, like your capital adequacy, non-performing loans, liquidity, are all going to be affected if there is a contraction of economic activity because of the price stability. So your financial stability is also under threat. And how to create a balance between the financial stability and the price stability becomes even more complicated when you bring in financial inclusion. And I consider Islamic finance to be a pillar for financial inclusion. If you really want to follow the spirit of Islamic finance, this is a very potent instrument for financial inclusion. But are we actually doing what we are supposed to do under the Islamic finance? In Pakistan, where I started the Islamic finance in 2001, now this is 22 years later, the medium and small industries, the small farmers, the low-cost housing, the women entrepreneurs, and the employees who are getting consumer goods, they used to account for, at my time, they used to account for almost 30% of all advances to the private sector. Despite Islamic finance has now grown to 20%, the share of these sectors, which I called an underserved or unserved sectors, has gone down to less than 10%. So are we going towards financial inclusion? Are we actually doing what we are supposed to do in Islamic finance? No. We are following what the conventional banks are doing, just putting whistles and bells to make them Sharia compliant. But the actual spirit of the Islamic finance is that is equity, and that is not being followed by our own institutes. So financial stability, if you ask me, is lacking because of the financial inclusion. But the price stability then hits it even further because your earnings, your non-performing loans, all the financial soundness indicators are affected. The other problem is that our productive capacity of real sectors in the economy, because of the central bank's roles on financial development, has now shrunk or has remained static. While as the disposable incomes rise, your aggregate demand for goods and services rises. And because your aggregate demand is rising, but your supply is constrained, this demand spills over into imports. And when you have higher imports, you have current account deficits which are widening. And in order to fulfill the current account deficit gaps, finance them, you have to borrow externally. And therefore your debts are also going up. So if the future, you don't increase your supply, and that is through the economic growth, and I pointed out that central banks are so much obsessed now, even in developing countries, with the price stability, that they do not realize the unintended consequences of neglect of economic growth because your supply is not increasing domestically, productive capacity, and you are giving rise to the deficit on external account, and therefore putting pressure on your balance of payments as well as borrowing. And finally, I would again say that after Ukraine-Russia war, as the prices of fuels and fibers, food, fertilizers increased, the demand for the fossil fuels has actually gone up. And you have a institutional arrangement of all the fossil fuel producers, which is OPEC. And they have taken steps to reduce the production in order to raise the prices. The prices now have gone up to $85. But there is no concerted effort or institutional arrangement whereby renewable energy producers can come together and say, well, if we want to replace the fossil fuel producers, this is what we should be doing. So OPEC is there, but there is no RE-OPEC, which is for renewable energies. This is a huge gap. And I think OPEC will continue to be powerful because the demand for the fossil fuels is not declining. And the renewable energy is not moving ahead on the same direction. So these are the trade-offs, which, as I said, the central bank has a role to play, but it's not the only actor. It has to be a combined effort of the governments, of the private sector, of the civil society, and the central banks, and the banking and the financial sector. Now, finally, what should be doing, despite we know that this is going to happen, these are the uncertainties, and somehow or the other, we may face another crisis from time to time. We can't predict when the next crisis is going to happen, but there will be a crisis because of these uncertainties. I don't have all the answers, but I have some suggestions for all of you to consider and think about it. The central banks have to develop their own capacity internally in new areas of expertise. Data analytics, machine learning, artificial intelligence, in order to improve their instruments of surveillance, in order to get business intelligence. It's not enough to get the reports from your banks and rely upon them. There's now a huge information outside the banks, which is available. If you look at the Bloomberg, if you look at MNBC, you can pick up, very, very pertinent pieces of information, which you can't get from the reports of the banks. You have to invest in business intelligence in order to gather information outside the normal sources. And that will enable you to find that there are imbalances being, built up in your financial sector. If you go just the way the business as usual, you won't be able to anticipate as to where the excesses or excess imbalances are being recovered. Now, data and business intelligence are predictive tools because you have, through the machine learning, you have huge data sets which provide you the patterns. And you can use those patterns in order to predict the future course. It's not perfect, I must say that, but at least better than looking at the past reports of the banks and saying, well, everything is all right. The stress testing, which we all do, should not be only deviations from the assumptions on the macroeconomic parameters, but they have to take into account black swan events. Global financial crisis, no economist was able to predict, but it happened. And it completely shattered the global economy. Now that's a black swan effect. The central banks did a good job. I'm not denying that, along with the finance ministries. COVID-19 is a black swan effect, and it disrupted the economy in a very fundamental ways. And again, the central banks came to the rescue. They provided the stimulus packages. They brought the interest rates down to almost zero. They provided financing for employment, and they did a lot of things. But no stress test was done before COVID-19 in order to predict that if this happens, what are we going to do? And similarly, the disruptions of technology and climate change. I haven't seen any central bank deciding that, look, if the climate change goes in this direction, what is its repercussion on the financial and the price stability? So they have to be very, very alert on this one. Then the second point is that our monetary policy transmission mechanism to the financial system as a whole and to the real economy is now imperfect, because shadow banking is coming up. And shadow banking is a big player through digital banks, through peer-to-peer lending, through crowdfunding. And financial is a tech company. But look at the lending they do based on the machine learning and artificial intelligence on the patterns, that their scorecards are being used by the banks in order to provide the lending. So this is a tech company. Fintechs, for example, are going to completely disrupt the whole process of the transmission of the monetary policy, because we assume that the monetary policy channels are through the what I call as the regulated entities, which are the banks or the non-bank financial companies. But there are a lot of players and the shadow banking which are outside. And if you look at the subprime mortgage crisis of 2007, 2008, the culprits were the shadow banking, where people who do not deserve to get mortgage financing were provided by the mortgage brokers and firms. They were outside the control of the central banks and the regulators. The third one is that the central banks have to remain alert, agile, and nimble, and they have to be very proactive. Having belonged to this fraternity, I can tell you that we are more conservative, we are more reactive, we are more complacent, we are more laid back. We are not proactive, we are not nimble, we are not agile, and we have to change our behaviors and attitudes to anticipate. We may not succeed all the time, but at least we should try to anticipate as to what is really going to happen. The other thing which we found is that the monetary policy alone is not sufficient, but it's quite powerful if it is coordinated with the regulatory and supervisory measures, for example, on the macro-prudential instruments that reinforce the policy impact and credibility. For example, you have statutory reserve requirements, you have cash reserve requirements, you have OMOs, you have many other macro-prudential. You can coordinate them with the monetary policy. The outcomes are going to be much better because, as I said, the monetary policy is leaving out some of the main players in the shadow banking. So the coordination, and it's good that the central banks are now given the authority of the supervisory and regulatory. You remember FSA was formed in UK, where the regulation and supervision was taken away from the central bank, and UK really suffered because these regulatory agencies diagnosed the problems, but they were not lender of last resorts. And there was no coordination between the monetary policy and the macroprudential regulation and supervision. So I think that is something which is healthy. Germany, for example, still has Bundesbank and Finban, which are quite separate. They have to come together in order to be a central coordinated entity where the monetary policy, supervisors, and regulatory decisions are taken together. And the final point I would like to say that the central bankers, by their temperament, by their nature, have been very evasive of communicating with the stakeholders, and especially the general public. They have been talking in language which very few people understand. I mean, I couldn't understand what Alan Greenspan used to say. I was in the same fraternity. His words just didn't mean anything to me as to what I'm deriving from his message. But fortunately, there has been some very positive movements, not to my entire satisfaction, but Jerome Powell comes, Christine Lagarde comes to press conferences, delivers at the World Economic Forum. They have more interactions. But the language is still, maybe deliberately, they don't want to disclose everything, and they want to keep things together for themselves. Because once you say words, you are held accountable for results. And if the results are at variance with what you had committed or you had spoken, then you are in trouble. So maybe that is the reason why there is so much of ambiguity in communication messages. But lo and behold, today's world is all governed by communication, by social media, by electronic media. Print media, of course, is not very important. So if you don't tell them what you're doing, you are not able to get your message across. And the behavior of the players, of the stakeholders who are affected by your policy interventions do not know as to what they should be doing. So to bring about the behavioral change, it is necessary that there will be effective communication. Let me confess that this is not an easy task at all. I was very much in the positive, active communication mode, but at times I was put on the spot. I tell you honestly, when you're put in the spot in front of all the cameras, you realize that you should have been more careful in what you were saying. So it's not an easy task at all. It's a very difficult task. But it's better to err on the side of more communication rather than err on the side of caution, because the world has changed. Even when I was a governor, the world was not dominated by WhatsApp and Facebook and Twitter and Instagram. Today, I mean, what happened to the Silicon Valley Bank? Thanks to Trump, they took away the supervisory authority of the SEC from looking at the middle bank. But what triggered the run on the bank was just on mobile banking, because mobile banking now is the most prominent role as far as the banking transactions are concerned. People don't go to the brick and mortar branches anymore. So imagine at the spur of the moment, the social media splashed the news that Silicon Valley Bank is in trouble. You and I, as depositors, what would we do? We will just go to our mobile bank and say, withdraw, 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 and all of a sudden. And the fundamentals of the bank, I have a lot to take them to task because they concentrated their risk in startups, which is not a very good proposition, because out of 10 startups, only 6 or 7 really make, or 2 to 3 make to the next stage, 6 or 7 just disappear. So how can you have a concentration of risk in a sector which is so volatile? So they made a mistake. I'm not defending them, but I'm saying that the reaction of the borrowers because of this whole mobile banking, and the mobile banking now, you go to Kenya, you have M-Pesa everywhere. Everybody just has M-Pesa accounts and all the transactions are taking place. Now India, for example, the vendors who are selling their fruits, they have QR codes and you can pay through the QR codes. So that, I think, is where the effective communication by the central banks would help. Thank you very much for showing me the time. I really enjoyed coming here and talking to you, but I'm more interested in your reactions, in your questions, because I learned from you. It's not a one-way street. I always learn from the people whom I'm addressing. So thank you very much.
Thank you, Dr. Ishrat, for this brilliant and insightful lecture. I'm sure my colleagues have learned a lot from these notes. Dr. Mansour Mukhtar is also an economist, so we would be happy to have few comments from Dr. Mansour, if you don't mind.
Thank you. Thank you very much. Let me, first of all, thank you, Dr. Sami, and the IsDBI team really for creating this platform to have Dr. Ishrat Husain share his rich experience, perspectives, and insights on a very topical issue. And of course, as you acknowledged in the opening, it's really a very distinguished person, a person with many hats, although you can't see any of them now, invisible hats, but policy making at the highest level, international development, banking, academia, and a think tank, and really has enabled him to accumulate a wealth of experience on these issues. I know that in the World Bank, he was highly revered as the chief economist, but also as the rest rep in Nigeria during a very critical time when we are undergoing reform. And he's been a friend of IsDBI, of course, and a useful resource person, providing advice in both formal and informal capacity, and has also been involved in managerial selection, ensuring you have people. I can tell you he was on the interview panel when I was being interviewed for my position. And of course, in the interest of transparency, when I entered before the interview, he told colleagues that in the interest of transparency, he wanted to indicate that he knew me. Notwithstanding, he asked the toughest questions, I can tell you.
I only believe in selecting the right person for the right job. That's the only thing I do. And you can have.
Thank you. So this has been a very, very rich contribution to this discussion, very useful insight, and thought-provoking, and really it does illustrate the magnitude of the challenges we're facing when we're talking about uncertainty. Many of us were just, focused on the COVID-19 related events, the uneven slow growth, and the world economy recovery, issues related to the Ukraine war, but it's certainly much more complex than that, as was highlighted to us. And I think one of the key takeaways is that we need to appreciate this complexity and interconnectedness of the range of issues that are shaping and impacting our developmental trajectory, and that the future is going to be really very turbulent. And now we need to see this uncertainty as a part of life by policymakers, but to appreciate that we cannot expect a single institution to address these challenges. And really, it transcends the role of government in fact, and delves into other areas in terms of other actors, the private sector, non-governmental organizations. I think that's very insightful, really, for us to appreciate that whatever we're doing has to be put in that context. And I think also the other thing that came out is that there are trade-offs involved, and we have to really confront this and address this. And some instances, we may be constrained by the nature of the polity or the structure of the political economy, particularly in some of the countries that we're dealing with, where we have elite capture that's been manifested. And therefore, I think that in itself, I think it's a separate discussion. And I know that we may not have all the answers, and many of us really, it's not in our realm to address these political economy issues. It's really subject to the internal dynamics, the socio-political processes, and require some political activism to be able to address those. But at the same time, I think it's important to surface these as key issues and challenges that need to be confronted. And I think the other issue about the trade-offs were related to that is that we have basically, sometimes we may be faced with competing objectives and within both temporally and intertemporally, and see how we balance those. And we can't win all the time. Sometimes they may have to let go, but primarily from the policy perspective, that we need to really, if you like, put aside dogma and orthodoxy. We have to think again, looking at what's been done before, and really question what's been done before, not take things for granted, and think across, look at the lessons that can be drawn from the other experiences and see what lessons we can draw. But importantly, I think the key message of that, look, we need to really develop that ability of thinking ahead and anticipating new challenges and new developments, and how we're going to cope with those and address those issues. So it's not about staying within our comfort zone and trying to see what's happening around, but really even transcending that. And for that, I think for me, the key thing is, do we have the capacity in many of these developing countries to adopt this policy mindset, and including in the central banks? Do we have the capacity and the capabilities? We've only flagged one area in terms of developing data analytics and internal capacity in that area. But I think it transcends that. Though you talked about the need to be nimble, to be agile, to be proactive, maybe that's part of that. But for that, really, it's easy to say that, but really, if you look at many of the central banks, I think we need to invest a lot of effort in developing these capabilities. One of the things that I really would have liked to comment on is, if we're envisaging a greater role, and we've seen a greater role being assumed by central banks across the globe, in this context, particularly in terms of the stimulus packages and lots of other things that have been delving into, giving them more regulatory roles and supervisory roles, and some of these decisions have a really significant impact in terms of altering the balance, societal balance in terms of access and equality, etc. But at the same time, I think there's a very deficit in terms of the accountability, holding them accountable, and to the, if you're giving them more powers, really, I mean, we're just seeing things unfold in Nigeria. If you've been following the events and the central bank, what's happened in the last couple of years, it's pathetic, really. So that's really one extreme example. But really, I would like you to comment on that in terms of how can we strengthen accountability, make it accountable to, if you're envisaging these roles for a central bank, what kinds of instruments and mechanisms we need to put in place to ensure that that we are countering that. Of course, you've referred to communications, and I think, yes, transparency, openness and transparency is key. So these are just random thoughts. I wanted to some of my takeaways from this, but I still have, I mean, it just requires a lot of reflection in terms of how we can take this forward, how we can really enhance the capacity to address and tackle these issues. Oh, the last point I wanted to make is this, and maybe drawing on your experience. We've talked about, you made reference to the fact that really these things require combined efforts. We've talked about coordination also between some of these policies, monetary, supervisory, regulatory role, etc., but also the fiscal dimensions to that. But I think even the structural issue, there must be a platform, a common platform where you bring in all these actors, the Ministry of Finance, sector ministries, the central bank, financial authorities. They come together and see how collectively they will reinforce each other's efforts. So how do we, what kinds of institutional arrangements can we put in place in our countries to be able to achieve that objective in terms of really having a concerted, consistent approach to tackling these issues? So I would stop here too. But that's it.
Would you like to respond?
Okay. Before I forget, I think you raised two very important points. One is accountability. If you have an agreement with the parliament on the targets which are given to you, and you deviate from those targets or the criteria which have been given to you as your deliverables, then you have to explain it to the parliament. The parliament actually has been elected by the people, and therefore you should be accountable to the parliament. And your appointment should also come not from any one individual, but a parliamentary committee which screens the candidates. So that's a very powerful tool for accountability. As far as the question of institutional arrangements or coordination, I'll refer you to two very successful examples. One was in Malaysia, where the Prime Minister's office had the EPU, where all the ministries came together, made the plan, and then they were responsible for implementation. And there was a review and monitoring whether you are following that or not. And same was in Korea, with the president himself sitting down and asking, why haven't you done this? Why haven't you done that? Very regularly. And the other one was Indonesia, where there was a coordinating minister for economy. And all the ministers of the economic ministries, agriculture, industry, production, they all reported to him, and he was able to coordinate. And in China, you have the National Development Reform Commission, which brings it together. So there are some good examples which can be followed by developing countries.
Thank you very much. If you allow me, I know many of you have many questions, and even my colleague, Brother Amir. So I'll try as much as possible to pick the questions. So let me start from the right, and I'll be jumping from one side to the other. Tfaddal.
Assalamu alaikum, Dr. Ishrat. I'm Adil Ashraf from Risk Management Department of the bank. And I'll quickly, at first, like to thank you for the prudential regulations that were introduced in your times. And they have paved the way, the foundation of the banking sector. And today we hear so many things about Pakistan, but our banking sector is still stable. And I think the prudential regulations that were introduced in your time are a big key for that success. So thanks again. They are a reference for us. Even today, when we look at other banks, we refer them. Coming to the today's topic, I would like to refer to the uncertainty list number 3, which is income inequality. A much more impactful thing and much less talked about. And then coming to the digital transformation that we have talked about. And lastly, the trade-off between fiscal challenges versus the capex. A couple of decades ago, it was very difficult to bring in common man public into the infrastructure development. And it has been in the hand of MDBs, a big rich sponsor and a big manufacturer, all three coming in together, and it ends up with the existing rich sponsors making him more rich at the end of the day. We are talking about concession, PPP, private sector coming in, but
Please.
again, so the question that I have is that now with this digital transformation, it is very much feasible now to bring in the common man and give him a part ownership of that infrastructure development. And existing stakeholders won't do it because of their vested interest. And I think the central banks need to play a bigger role, like something that has happened in Malaysia and in Brazil, where central banks put in so regulations that this ownership can be given to a common man. And common man just doesn't pay the bill, also owns that infrastructure and gets a benefit out of it. So how central banks can play this role to push this forward?
Please limit your question to 1 minute. Tafadhal. Yes, you.
Okay. Assalamu alaikum, Dr. Ishrat. Thank you very much for the very insightful lecture. The first problem you highlighted was market instability, and I would just like you to expand on this. Specifically, if you look at our member countries, we have very high inflation, no appetite for higher interest rates, negative current account deficits, high political instability, unfavorable speculation on our currencies, and all these lead to deeper socioeconomic problems and devaluation, poverty. So what's the way out? What are we gonna do to solve these problems? What's your solution for this?
Brother Musa.
Answer in 1 minute.
Thank you very much for the insightful propositions about the issues at hand. My question is about central bank autonomy, especially in the light of some of the arguments you've made, and actually Dr. Mansour highlighted some of them. It has been a very dominant issue for some time that if you want a central bank to be effective in addressing its jurisdictional function, you need to give it some level of autonomy. And now we've seen, as you rightly pointed out, central banks have now crossed over into some other functions outside their jurisdiction, which has now exposed the central banks. And in the process, they have lost some of this autonomy argument that they require. In the light of your experience, especially being the fact that you've been at the central bank and also you've been at the executive as an advisor, to what extent do central banks need autonomy to be effective in playing the role they're expected to do? And well, for instance, Paripash, you mentioned about the parliament. How regularly do they have to report to parliament? How regularly do you have to report to the president? And all those issues around, autonomy, effective coordination. Thank you.
Thank you very much, Doctor. And then let me join colleagues and say thanks very much for the excellent presentation.
Can you introduce yourself so I get an idea who is from which department are you?
I am Ismail Kurma.
Sorry about this.
I am Ismail Kurma from the Communications Department. I want to express again my thanks for the excellent presentation. Just three key points. One, I am not an economist, but I think based on my colleagues mentioned about the autonomy of the central banks. For me, I think what I'm seeing is that the rule or the central banks are becoming more territorial nowadays. They're becoming more territorial than what they're supposed to do. But with regards to communication, I agree with you entirely that they need to do more. But again, in my secondary school days, I think some of us, we are taught that central banks are conservative. Maybe it's because of conservative nature. That explains why they are not able to communicate well.
1 minute.
Then finally, in your view, which one best fits in terms of the government's control central bank? Which one best fits the current economic trend, especially considering the suffering or the problems, the economic problems in developing countries when you talked about the scope of the central banks? Thank you.
Thank you very much. My name is Rizwan. I'm from Risk Management Department. So I want to highlight on the first point that you mentioned, the uncertainty, the macroeconomic instability. Actually, in last 3 years, what we have seen, the role of central bank is very prominent in the globally. When the COVID came, the central banks came with a huge stimulus package and expansive, very expansive monetary policy. And now the inflation actually went to the roof, it reached the 40 years high. And now central bank is coming with a very conservative monetary policy. So one of the 3 reasons for the high inflation is that like supply chain constraint and the commodity price. But one criticism is that the too much money supply into the economy was one of the reasons for this high inflation. So I just would like your expert opinion that the recent role of central bank in the last 3 years in global economy with 2 different monetary policies. I mean, was it too much reactive, or it was an appropriate? I mean, just to know your expert opinion that the world is facing now this situation. Is the central bank is accountable for that, for the policy matters? Thank you.
Yeah, Assalamu alaikum wa rahmatullahi wa barakatuh. Bukhari Silla from the Islamic Development Bank Institute. Thank you very much for the excellent presentation. I have actually 2 questions. The first question is about this, the objective of the central bank, because like what you present is like we will move to the multiple objective, system. And but from your experience, we know the central bank that we are focusing on single objectives and those who are trying to achieve a lot, because now you have a lot of sources of uncertainty and they could be canceling out each other. So which one you want to focus on? Will multiple target will be more effective, or those who are focusing on single targets? So that's one thing. And also on the macroeconomic instability, the debt sustainability has not been highlighted in your presentation, and I know it is one of major uncertainties, especially for our low-income countries. So that's one. Instead of inflation, we may have debt sustainability versus growth, because you have that issue now. You want to scale up, but then it will have raise your debt, and then we cannot have growth without scaling up. Finally, we have this Joseph's computer model that said that actually the economic growth or the economic production start with the credit, what they call the creditary production cycle. So the banking system led by the central bank is assumed to restart the production by offering credit to produce and offering credit to consumers. But then he said that it will end up in the disruption, that what he called disruptive economic growth at the end of the day. But the central bank has to be ready for that disruption, because that is part of the economy. Without disruption, there will be no growth, according to this document. Thank you very much.
Thank you very much. Very nice questions. I personally think that on income inequality, it is more a question of political economy rather than central bank doing anything. Because the policies which require targeted subsidies for the poor are now being hijacked by the elites, because they are in the parliament, they are the ministers, and they have to perpetuate their interest. For example, in Pakistan, the landlords of agriculture, the real estate developers and the managers, the wholesale traders and the retail traders are making huge money, but they are not being taxed because they are in the decision-making positions. Now, if you mobilize that resource, your targeted subsidy for the poor would only be 1 or 2% of the GDP. And it is affordable without affecting your fiscal deficit. So it is a political economy which is really restraining from going and attacking the income inequality. Or you have vocational and training, technical training for out-of-school children. That requires some investment. So if you have a higher tax collection, you can allocate some of it. And local government system devolves the authority, the powers to the communities who know their problems much better than anybody else sitting in Islamabad or Karachi or Lahore. So devolve the powers, give them the resources. These are the instruments through which the income inequality can be reduced. As far as digital transformation is concerned, now income inequality, it is a very powerful tool for the financial inclusion. So the branchless banking, for example, has taken off because of the digitals. Now we are going for digital banks. So brick and mortar banks are becoming totally, useless. So once you have the digital banking and you have an ID system, which is a national identity system, and you have biometrics, and you have what we call as the UPI, like India, which is the platform on which you can build the APIs. The digital transformation can bring about financial inclusion and also help you as far as both the economic activity is concerned and also income inequality. Now, capex and fiscal, again, if you take white elephant projects because they are politically very visible, but they take you ages, and you only want to have the foundation stone in your name because you want to show to the people that I have done this, those capex expenditures are totally of no value to the society. But if you have capital expenditures which link the farmers with the markets, or which you provide storage facilities for the agro business, or the cold storages for the dairy products and others, the incomes of the poor farmers and those who are related in the agriculture rise. And that actually is low cost as far as the capex is concerned. And it's not affecting your fiscal deficit, it's increasing the productive capacity of the country. On the central bank autonomy, let me make it very clear. No central bank is autonomous from the government. It is autonomous within the government. Let me be very clear. Some people interpret that the government may be going in their direction and the central bank, no. Central bank has to be a part of the achievement of the targets which are set by the National Economic Council. The National Economic Council is the highest constitutional body, and it says to me, we want the inflation rate to be 5% average for the next 3 years. I have to defend whether I can achieve it or not. If I'm not able to achieve, I will argue my case. But the final decision is that of the National Economic Council, which brings in all the decision makers from the federal and the provincial governments. And they monitor, and you report every quarter to the parliament as to whether you are able to achieve. If you're not able to achieve, are there factors outside your control? For example, we had the Ukraine war, and the prices of LNG went up the top. And therefore, we had to increase the petroleum prices, which contributed to the whole inflation. Now, this is not what the central bank had under control. This is the exogenous shock. So we can justify that we are not able to fulfill the target because of that. So it's a dynamic process whereby you have to justify whether you are on the right track or not. But it is autonomy within the government. As far as the government controls are concerned, I'm afraid that the ministers of finance have a very big tendency to control the central banks. And that is not desirable, because if they want the central banks to finance their own fiscal deficits by creating high reserve money, and at the same time they expect the inflation to be subdued, these are contradictory, targets for them. The Minister of Finance is very generous in expending his expenditure and asks the central bank to finance it. But at the same time, the central bank is under obligation that the target inflation rate is 5%. You're actually fueling the inflation. So I'm not in favor of the Ministry of Finance to control the central banks. On the question of stimulus and contraction, look, the world doesn't remain static. So when we were confronted with the COVID, the whole attitude of the government as well as the central bank was, how do we stimulate the economy? How do we avoid unemployment? Because that was the main concern. The people were sitting home, they were not going to work. So how do you keep the wheels of the economy going? So the stimulus at that time was very much desired. But once the stimulus had worked its way through, there was a demand which was spilled over into higher prices. And therefore, the inflationary pressures were such that the central bank has to take action. So you take the data points which are in front of you, and then you work on it. As the data points change, you change your gear. You not always go in the top gear all the time. Sometimes you go to third gear, sometimes you go to the first gear. So that is what the central banks do. They look at the data points, the evidence, and say what needs to be done. So to me, what they are doing in contractionary policy is purely justified because there is a excess demand which has to be suppressed. So in hindsight, all of us are very clever. So you're in hindsight saying, oh, should they have gone for a stimulus? At that time, people were saying, oh, this is not enough stimulus. There should be more stimulus. So let's not sit in judgment with the hindsight, the rear view mirror. But you must realize that we have to take real-time decisions at that point of time. Now, the objectives of the central bank and what the focus would be, you asked me personally. I have argued every time, to me, the economic growth and development are the major objectives of a central bank. Provided you don't disturb the price stability, you don't disturb the financial stability. So you have three objectives, but the prime mover, in my view, is that of economic growth and development, whereby you're creating jobs for the people, and therefore you are creating opportunities for expansion of the economy. And when you expand the economy, your prices do stabilize. So there is a relationship between that. And in the financial stability, if you give credit to the agriculture sector, to the real sectors, to the export sectors who are producing goods and services, then it is also coterminous with your economic growth. So in my view, economic growth can have secondary effects, both on price stability as well as on the financial stability. So these were the questions. I welcome them, and they were very helpful to me to clarify my own thinking, especially from you on the accountability side. I think that's a very important question.
Thank you very much, Dr. Ishrat Husain. We are now 12:30. We wish had more time to address and give the floor to all colleagues. Let me conclude by inviting Dr. Zamir for a few words.
Bismillah ar-Rahman ar-Rahim. Thank you, Dr. Samis. And first of all, my apologies, Dr. Ishrat. I could not be here earlier because of some other commitments, but on behalf of the Islamic Development Bank, we really want to thank you for your time. It's always enjoy our time, so much of learning. MashaAllah, you have such a very well-rounded experience from coming from the World Bank in a purely doing development, and then the central bank doing the monetary policy, and then coming into more really in the public sector. And mashallah, one of your book contribution is on the civil service reforms. So I think this is a very, very kind of beneficial for us. I know Dr. Ishrat had a very, very condensed schedule, but he was very kind. He's always has been a very good friend of Islamic Development Bank, and we really appreciate and value his concern for the Islamic Development Bank. And maybe a lot of people, some people may not know, but he was also the pioneer of introducing the first Islamic bank in Pakistan. Al Mizan, and that has become a success story. Now it's almost has a 25%, 20% or so market share. So mashallah, his contribution to Islamic finance, to Islamic Development Bank will always be remembered and always be appreciated. I didn't get a chance to ask a question, but I was very surprised that everyone was asking these questions, but nobody asked question related with Islamic economics or finance. So, okay. But thank you so much, Ishrat. We are very kind always to Islamic Development Bank, and we have learned a lot from you. Thank you so much. Just wanted to, on behalf of our staff, colleagues, and the president, I wanted to thank you.
Thank you very much. Thank you.